Thus the world we have so long known, in which most currencies were redeemable at a fixed price in the store of value money like gold, is in disarray. Yes, and it's been in disarray since 1972. And it's on its last legs, people. That's what the price of gold and silver are telling us. Wednesday, December 17th, 2025, Maneco 64, home of alternative economics and contrarian views. We're going to talk about monetary history and how we're living through it. In my opinion, it's a momentous occasion. It's the reversal of the aberration that we've had for about 50 years of what John Exter called I owe you nothing's currencies, right? And we're going to come to that in a minute. And I think what gold and silver in particular are telling us, their prices, is that he who has the gold and the silver now will write the rules. Yes, the era of fiat currency, of the fiat dollar, is coming to an end. And it might sound like a bad thing for the United States, but I actually think it's a good thing for the United States and for the rest of the world going forward, because we're going to go from a debt-based, financialized system into a more sober, real asset-based, commodity-based system. It doesn't mean that there won't be finance, but it's the analogy of the tail wagging the dog, right? Finance is the tail, the dog is the real economy, and it's gotten too much out of hand, and I think it's a great thing. So before I start, just wanted to give you guys a reminder that yes, if you've been stacking gold and silver like a lot of us have on this channel, you want to make sure that some of the stack that you keep close to you is safe. So you should think about getting a Dirty Man safe. I've been working with Dirty Man safe for a few years now, and it's a great product. So if you want to find out more, go to the description of this video. There's a link for a landing page. You get 10% off from Dirty Man Safe. They'll ship not just to North America, but also to Europe. So back to the I owe you nothings, right? And this is an article John Exter wrote back in 1972. Just after President Nixon closed the gold window on August 15th, 1971. And I said earlier that it's been a 50-year or so aberration. Some people might say, oh, it's 54 years. But they try to keep the Bretton Woods system kind of going up until 73, 74. They try to fix keep the foreign exchange rates fixed. What we have today, fiat currency forex market that fluctuates, is also really an abomination, I would say. It's like trading the exchange rate between the foot and the inch every second, or the foot and the meter, the kilo or the pound. It doesn't make sense, because currencies are supposed to have a fixed value of gold and silver, of the monetary commodity, right? So the fact that it's fluctuating is a really bad thing, but that's a symptom of this system that we've had. I owe you nothings. And I'm not going to go through the whole essay, but I'm going to go through the most important part here in the beginning. I'm going to put a link to it in the description. You can go through the whole thing. Just a little bit on John Exter. He was part of the establishment, went to some good universities, trained as a diplomat, I think. He also helped found the Central Bank of Ceylon at the time it was called, now Sri Lanka. He helped found the Central Bank of the Philippines. He worked for the New York Fed. And more importantly, in the 60s, he became a gold bug. And he bought a lot of gold back then. And people might ask, how did he do that if he was in the US? Well, he bought sovereigns. Some sovereigns were considered numismatic coins. So that's how he got away with it. There's a loophole in the banning of owning gold that Executive Order 6102 implemented back in 33. But anyway, this is a talk or an article written for American Institute for Economic Research, Great Barrington, Massachusetts, June 1972. So John Exter says, currencies today are IOU nothings. And by that he means all of them, not just the dollar, right? Now that the international monetary system we have so long known has broken down and the world is groping through monetary reform for a new one, it is time to consider some fundamentals. What is money anyway? Before I continue, I'd say we never got that monetary reform. The world never got back on any system. It's been very informal, and it hasn't really been a monetary system. It's been a debt-based system where, and therein lies the problem. You can never extinguish debt because you have to keep rolling over the debt. And this is why it's ending right now. And I think the BRICS, they're taking the leadership. They're taking the leadership by buying a lot of gold. They know what's coming. They're buying a lot of silver, as I keep hearing from my source, physical that is. So silver, yes, is very important industrial metal, but silver's coming back, people, as a monetary asset reserve. Who knows, might even come back in coinage form or tokenization. I hope not. But yeah, and that's why the price is going to go to levels no one really expects, except maybe our crowd here in the sound money stacking world. But anyway, what is money? As John Exter says, well, first, it is a means of payment or medium of exchange. I prefer the first phrase. It is simpler. We all use money to pay our bills, to buy goods and services. We also accept money when we sell. Second, it is a standard of value. We quote values of goods and services in terms of it. The resulting ratios are prices. Third, it is a store of value. Well, the current fiat dollar and all the other fiat currencies are anything but anymore. We hope to avoid loss by holding it. Money holds its value if it is scarce and remains scarce. Scarcity is the keystone of store of value money. Today, no money in the world fully performs all three services. National currencies are being used as means of payment and standard of value money, but none in this inflationary age is an assured store of value money. In fact, the foremost concern to voters and politicians everywhere is that so many currencies are so rapidly losing their value in terms of commodities and services. Commodities like gold and silver, which are being used as store value money, are not being used as either means of payment or standard of value money. Well, they're coming back as means of payment, especially among sovereign nations. And that's what the Chinese, the Russians, the Gulf cooperation countries, India now with silver, that's what they're doing. They're going outside the dollar system because they know the dollar's toast. Anyway, thus the world we have so long known, in which most currencies were redeemable at a fixed price in the store of value money like gold, is in disarray. Yes, and it's been in disarray since 1972. And it's on its last legs, people. That's what the price of gold and silver are telling us. And I'm going to come to John Exter's inverted pyramid to show you what happens in this crisis that we're in the middle of it. People are confused and wondering what money they can trust. Sensing the inability of the system as a whole, they turn day by day from one means of payment money to another in foreign exchange markets. There you go. Oh, the Swiss franc's doing better. Oh no, the British pound is down today. The dollar is up. It's just a waste of time. You need to be in store value money, i.e. gold and silver now. Yes, have some fiat for emergency, but don't hold much of it because it's going the way of the dodo bird. And much more gradually to store value money like gold in the London and Zurich gold market. So I'm going to stop here. And I'm going to put the rest of the essay or article, the link below in the description. Highly recommend you read it. And now I'm going to bring you to John Exter's inverted pyramid. So it says here on Wikipedia, Exter is known for creating Exter's pyramid, also known as Exter's golden pyramid and Exter's inverted pyramid, for visualizing the organization of asset classes in terms of risk and size. In Exter's scheme, gold forms the small base of most reliable value, and I would add silver to that now as well, of course. And asset classes on progressively higher levels are more risky. Of course they are. They've all got counterparty value, risk, excuse me. The largest size of asset classes at higher levels is representative of the higher total worldwide notional value of those assets. While Exter's original pyramid placed third world debt at the top, today's derivatives hold this dubious honor. Yeah, there's an estimation that the notional value of derivatives is something north of 1,000 trillion, which is a quadrillion, and it probably is. So I think from what I've read, I did read John Exter's articles back in the early 2000s prior to him passing away. And he expected this non-system, i.e. nothing currencies, to end in a total deflationary collapse where all the liquidity from these riskier assets at the top and so on flowed into gold, and I would add silver, and they would flow through paper money, of course, prior to going to gold and silver. Paper money or deposit money, whatever you want to call it. So a lot of people expect a deflationary collapse, like of the markets, of the economy, but I kind of think what's happening, because Rafi Faber says that hyperinflation and deflation are the same thing. Everything that's denominated in gold or silver, they go down in value, and gold and silver go through the roof. It's like Weimar hyperinflation. So what I think is going to happen is that a lot of the liquidity, of course, is going to flow down through the pyramid. It's already doing so. You see where gold and silver are. But I think the central bankers and the politicians, the governments, they're going to keep pumping this I owe you nothing currencies. And they're going to become worth less and less. And even if small proportion of it flows down to gold and silver are going to explode. And basically people are going to wake up one day and realize that the currencies are dead, the fiat currencies are dead, and all the value, a lot of the wealth and reserves, monetary reserves, they're all going to be in gold and silver. And that's what's going to happen. We could still have the deflationary collapse, but right now, I think they're going to hyperinflate. And as Rafi said, it's the same thing as a deflationary collapse. One day, everything will implode, and you want to have gold, silver, and anything but the currency. You want to have hard assets, companies that are involved in hard assets, in industrial enterprises, even technology should be okay. What you don't want to be involved in is fixed income, government bonds, corporate bonds, anything to do with insurance, investments, private equity. I think that's all going to go down the drain. So we are in for some interesting times. And actually, what we've had since 1971 or the early 70s is a complete aberration, as John Exter said. It's a non-system. So hats off to the BRICS and the Global South and the Gulf Cooperation countries for making a move out of this system. And I hope here in the UK, in the West, in the US, we do something and go back to a more sane system as well, instead of worrying about a useless war, really, that we're waging against the Russians in Ukraine. I think that's a total waste of time and something that's not needed. Our leaders, of course, they're not leaders, unfortunately. So you're going to have to do it on your own here in the UK, in the US, in the EU, because our leaders are not really enlightened to know anything about what we just went through here. So, where are we then this morning? It's 8 a.m. London time. Well, silver finally made new highs. We traded up to 66.55 overnight. Yes, it's down a little bit here. It's back below 66, but it's at 65.70. It's up about $2. So silver's really doing well. I expect the bullion banks, and the bullion banks, of course, are kind of the battalion for this fiat currency army. And they're going to fight to the end to keep this fraudulent system going. So I expect a lot of slams, like paper slams of the price. But I don't think they have a chance because they've manipulated the prices of gold and silver for too long, especially silver. And now the world needs physical, not just for industrial use of silver, but also monetary use as this I owe you nothing system comes to an end. So that's how I see it. Gold traded up to 43.42. We're now at 43.20, up about $17. So silver outperforming. So that gold silver ratio, or the diff. Yeah, I learned that the professionals in the FX market call it the diff. I learned it from Peter Carlin the other day. I interviewed him. And that's the other thing. Silver is traded on the foreign exchange market. Why is that? Well, because it's money, right? And it will always be money. Anyway, what else is going on? Well, we had some better than expected CPI numbers in the UK. Surprisingly, they came down a lot more than the economists thought. And I'm a little bit cynical. It was supposed to come out at 3.4%, came out at 3.2. It's still above the Bank of England's 2% target. Why am I cynical? Well, because Bank of England meets tomorrow. Now they have the excuse to cut, even though it's way above their target. I wonder if someone nudged someone at the Office for National Statistics. Yeah, I wonder. Anyway, but what that's done, it's actually hurt the pound. The pound is down almost 1%, which is weird because you'd think, yeah, the CPI is down, the currency should do better. But no, the currency is down because the market expects more inflation, more rate cuts from the Bank of England at a time when prices are still rising. We saw public sector wages going up almost by 5%. So hold on to your fiat currencies at your own peril. Keep stacking, I would say. That's what I'm going to keep doing. Anyway, the rest of the markets are fairly quiet this morning. And with that, I'm going to wish you all a very good day. Take care. Bye.